Imagine digging up an old forgotten box, maybe in the back of a closet or like a digital attic somewhere. Dusty, neglected for years. You finally open it, not expecting much, right? And inside, it's not just old photos or whatever. It's like a digital treasure chest, overflowing, a fortune that's multiplied, well, not just 10 or 100 times, but thousands of times over. That sounds like fantasy, but that's pretty much the real-world story we're diving deep into today.
It's a fascinating one.
Yeah, we're focusing on this incredibly recent event in the crypto world. An early Ethereum investor's wallet just woke up after more than a decade of absolutely nothing, dormant.
All decade.
And look, it's not just a story about someone getting incredibly wealthy, though. Let's be honest, that part's captivating.
Oh, absolutely.
But it's more than that. It's a really profound look into like the core dynamics of long-term crypto investing, market resilience, and, just how investors think and act.
The psychology is fascinating.
Yeah, totally. So our mission today for this deep dive is to unpack what this one single massive transaction tells us about Ethereum now, about the wider crypto market, and maybe most importantly, what it might signal for you if you're watching this, trying to understand these big shifts.
Yeah, connecting the dots.
Exactly. We've pulled together a whole stack of sources. We've got in-depth articles from places like The Block, My Trade Insights, Invest, CoinDo.
Good sources, solid analysis there.
Yeah, and sharp analysis from Root Data, Coring Glass, CoinStats, even discussions over on Reddit. There's community perspective.
Right, capturing all the angles.
These different viewpoints should help us get a handle on every angle of this. It's pretty intriguing. So let's get into it.
Okay, so let's start with the wallet itself. What's fascinating here is just how foundational this person was. We're talking about an early Ethereum investor, someone who was part of the ICO.
The initial coin offering, right, back in 2014.
Yep. Exactly, 2014. You have to put that into context. The Ethereum ICO was, it was groundbreaking. One of the very first big crowdfunding efforts using a blockchain. A whole new way to fund these decentralized projects.
So this person wasn't just like an early adopter.
No, they're more like a foundational participant.
Okay.
Someone who really bought into the ETH vision before it was even properly built, before the network was even live. They believed when it was mostly just, a white paper and a promise.
That takes some serious foresight, or maybe just guts.
Or both. It was a very different landscape back then.
And the initial investment, get this, it was remarkably humble, just $104.
Wow.
Just $104.
Right. Think about 2014. What does $104 buy you? Maybe like a full tank of gas and groceries for the week, a couple of video games.
And maybe a basic smartphone, something like that.
Not exactly a fortune.
Not at all. And Ethereum back then, it was barely a whisper. Just this nascent idea known mostly by, tech people, visionaries. It wasn't this global platform for DeFi and NFTs we know today.
Not even close. It was purely speculative.
So to put even that small amount into something so unproven, basically just an idea, and then to just let it sit untouched for over 10 years, that's, it's pretty extraordinary.
It really is. The wallet stayed completely inactive for more than a decade, as the sources say.
That level of patience is almost unbelievable. Or, like you hinted, maybe they just forgot about it entirely.
Could be. A lost password, maybe?
Possibly. Or a lost hardware wallet. We see long-term HO dealers, sure, but 10 years of total dormancy.
Yeah.
Through all those crazy market cycles, the bubbles, the crashes, the regulatory scares, the volatility. It's genuinely rare. It shows either this incredible commitment or maybe just a remarkable detachment. Did they set it and forget it? Did they not even check during the massive bull runs or the really brutal bear markets?
Imagine not checking when ETH first hit, like $1,000 or $4,000.
Exactly. And think about the security side, too. An old wallet setup sitting dormant for a decade could have been vulnerable if it wasn't secured properly from the get-go. Good point. So then, the awakening. Recently, this stash, 334.7 ETH, suddenly moved.
After all that time. Wow.
Yeah. Just imagine being that person, brushing off the digital cobwebs, that first transaction in over 10 years. What must that have felt like?
Finding a winning lottery ticket you forgot you bought.
Kind of like that, yeah. Rediscovering something long forgotten. So that modest $104, what did it actually turn into? How big was this gain?
The sources are clear. That initial $104 investment is now worth approximately $1.5 million.
Worth $0.5 million.
from $104.
Uh-huh. The scale of that return is just staggering. Quantitatively, do the math. It's about 14,269 times the original investment.
14,000 times.
Yeah, not just growth, that's exponential wealth creation. It just blows traditional investments out of the water over that same time frame.
Right, compare that. If you put $104 in the S&P 500 back in 2014.
You'd be looking at maybe, what, $350, $400 by now? Something like that. A solid return, sure, but...
But nothing like this. Nothing. Gold would be even less. Real estate. Single-digit annual returns, usually. This ETH return is it's in the completely different league.
Yeah.
It shows the unique potential, albeit high-risk potential, of getting in early on disruptive tech.
And $1.5 million. I mean, let's be real. That's life-changing money for almost anyone.
Absolutely. You could buy a nice house, even in an expensive area, fund retirement comfortably, set up a family legacy, start a whole new business. It fundamentally shifts someone's entire financial reality.
That's such a critical point. It's not just a number on a screen blinking. It's a totally different life path suddenly opening up.
Exactly.
And it really does showcase, like our sources emphasize, the immense potential of patience in crypto. It kind of validates that whole HODL idea, right? For the early believers, at least.
It's the ultimate HODL story, in a way.
Yeah.
It validates that conviction, that long-term vision.
But it also makes you wonder, how much discipline does that take? Or was it just luck, like forgetting about it? To actually HODL for a decade in crypto, that seems incredibly hard.
Oh, it's incredibly hard. It's easy to look back now and say HODL was the right move. But living through it, a decade of crypto history means surviving brutal bear markets, like 2018, 2022.
Yeah, that was rough.
Facing constant fear, uncertainty, doubt, regulatory crackdowns, and the massive temptation to sell during the huge bull runs. Imagine watching your $104 become $10,000,
Right.
then $100,000, then maybe crash 80%. And still doing nothing.
The psychological pressure must be immense.
Exactly. True patience in crypto means battling FOMO, fear of missing out, and that terrifying FUD, fear of losing everything. It's really a testament to either deep belief in the tech's potential or maybe, just forgetting you even had it, not just hoping for a quick flip.
It really is something. So when we visualize that $104 turning into $1.5 million, that 14,269x return, it's more than just a number, right?
Right. That visual sources mentioned, the slash chart idea, where you have this tiny little bar for the $104 next to a massive towering bar for the $1.5 million.
Yeah.
That hits you emotionally. It makes that abstract idea of exponential growth incredibly real, tangible, almost unbelievable, transforming $100 into $1.5 million.
It really underlines that idea that sometimes the hardest thing, doing nothing, can be the most profitable, but also carries huge risk, obviously.
Massive risk. This is an outlier case for sure.
Okay, let's dig into what this investor actually did when they woke the wallet up, the on-chain stuff. Because that gives us some clues, right? Like opening another layer of the treasure chest.
Definitely. The details matter.
So before moving the whole stash, they did a small test transaction first. What does that suggest? Extreme caution, like, whoa, does this thing even still work after 10 years?
Could be checking accessibility, functionality.
Or was it more like meticulous planning? Like, okay, I'm prepping to sell this. Let's make sure the mechanics work before I move the big pile.
It could easily be both, honestly. But what strikes me is the pragmatism. After a decade offline, a test transaction is just smart, prudent, almost essential.
Yeah, makes sense.
On Ethereum, remember, every transaction costs gas, paid in ETH. So sending a tiny amount confirms a few things. One, they still have the keys, the seed phrase. That's huge.
Right. Didn't lose it.
2, the network's working. Transactions are going through. 3, they know how to use the wallet interface after all this time or figured it out. And 4, they're aware of current gas fees.
So careful and deliberate either way.
Seems like it. And then the funds were moved to a fresh wallet. Now that's interesting too, not just sent to an exchange right away.
What could that mean? Better security.
That's a strong possibility. Moving from maybe an old, potentially less secure setup to a modern hardware wallet or a new cold storage solution makes perfect sense after 10 years.
Or maybe prepping for a sale, getting it ready to go to an exchange later.
Also possible. A fresh, uncompromised wallet might be better for compliance, or just cleaner for interacting with exchanges, or maybe just reorganizing assets. The point is, it suggests thought, strategy, not a sudden panic move.
Okay. And this isn't totally unique, right? You mentioned this is part of a bigger trend, these long dormant wallets waking up.
Yeah, it's not an isolated incident. If we zoom out, connect the dots, we're seeing more of these sleeping giants, as analysts call them, becoming active.
Any other big examples?
Oh, yeah. A really huge one recently was a Satoshi-era Bitcoin investor,
Mm.
someone who hadn't touched their coin since, like, 2010.
Wow, Satoshi era. That's an OG. How much did they move?
Get ready for this.
Mm-hmm.
Approximately $9 billion worth of BTC.
9 billion with a B.
$9 billion
Bravo.
from a wallet dormant since the very early days. It's almost hard to comprehend that amount.
That's insane. And did it crash the market? I mean, 9 billion?
You'd think so, right?
Yeah.
But here's the really crucial observation from our sources. Despite that monumental scale, it did not disrupt markets. Bitcoin's price stayed remarkably stable.
Didn't tank at all.
Barely a blip. And that's a key piece of context when we think about the potential impact of this $1.5 million ETH move. It suggests the market might be much more resilient now.
Okay, so let's unpack that. That $9 billion Bitcoin move gets absorbed without a ripple. That's a pretty strong precedent. But is the Ethereum market as deep, as robust as Bitcoin's? Can ETH really handle a multi-million-dollar early investor cashing out just as easily?
That's the million-dollar question, isn't it? Or the $1.5 million question here. It comes down to market maturity and liquidity.
Right.
And the crypto market, especially for the big players like Bitcoin and Ethereum, has grown exponentially since 2014. The depth, the liquidity, it's night and day.
So back then, this ETH move would have caused chaos.
Oh, absolutely. Even a fraction of this $1.5 million back in, say, 2015 or 2016 could have sent huge waves through the market, cascade liquidations, big price drops.
But not now.
Less likely. Now you've got billions in daily trading volume, a whole ecosystem of derivatives, and crucially, a much bigger institutional presence. A market can just absorb these large single-cell orders with far less volatility.
Like pouring water into a swimming pool instead of a teacup.
That's a great analogy. Early crypto market. Teacup. Huge slashes from any big sell. Now, it's much more like an ocean. A $1.5 million drop, even a $9 billion drop, gets absorbed much more easily. Doesn't cause the same tsunami.
And the fact the $9 billion BTC move barely caused a tremor, that really suggests this new level of resilience.
Exactly. It indicates that the underlying demand, the trading infrastructure, it's robust enough now to handle significant profit-taking, even from these ancient wallets, without major price shocks. It's a fundamental shift.
That really clarifies how maybe institutional demand acts as that buffer. And speaking of the market maturing, we should probably place this whole thing in the context of Ethereum's own journey, right? ETH is actually celebrating its 10-year anniversary since the launch back in July 2015.
Yeah, good point. It really emphasizes the network's longevity, its resilience.
It's come a long way.
Absolutely. From that initial concept, the world computer idea, to now being this global platform powering huge parts of DeFi, NFTs, countless dApps.
And the tech itself has evolved massively too, right? Like the merge.
Definitely. The shift from proof of work to proof of stake was huge. More energy efficient, more scalable, plus all the layer 2 scaling solutions, the constant upgrades. It's a testament to the adaptability in the dev community. Seeing this wallet awaken around the 10-year mark kind of highlights that whole journey.
Yeah, it really does. And one of the biggest drivers, maybe the biggest driver of this resilience we're talking about, as our sources point out, is institutional money finally coming in seriously.
Oh, absolutely. The spot ETH ETFs.
Right. These are seeing strong institutional inflows. This is relatively new, but it feels massive.
It's a total game changer. A spot ETH ETF, just to clarify for anyone unsure, is basically a stock market product that holds actual Ethereum.
So traditional investors can buy it easily through their broker.
Exactly. They get exposure to ETH's price without needing to worry about wallets, keys, self-custody, all that stuff. It simplifies access, lowers the perceived risk, and gives them a regulated way to invest.
And the numbers are big.
Huge. We've seen, according to the sources, a record $2.9 billion in inflows into these spot ETH ETFs just recently, plus high trading volumes. That shows real interest, real liquidity coming in from traditional finance.
And BlackRock is involved?
Yep. Sources specifically mentioned BlackRock's ETH funds drawing billions in inflows. BlackRock, the world's biggest asset manager. When they get involved, alongside other giants, that's not just hype. That's serious institutional capital deciding Ethereum is a legitimate asset.
Okay, so you've got these huge funds like BlackRock's ETH pulling in billions.
Yeah.
What does that do to the overall picture? It feels kind of ironic, you know? The institutions that early crypto folks were often trying to replace are now key to stability.
It is a fascinating paradox, right? But yeah, this whole trend is reinforcing ETH's growing dominance in institutional portfolios. It's signaling a new phase of mainstream adoption.
So ETH isn't just this niche altcoin anymore.
No, it's becoming a legitimate investment vehicle for big funds, pension funds, traditional investors. And that surge in institutional demand, it provides significant absorption capacity for large sell orders.
Ah, okay. So if our awakened whale decides to sell.
This new, deep pool of institutional demand can potentially soak it up, mitigating the price impact. It helps prevent those sharp drops we might have seen years ago. It's a fundamental shift in supply and demand.
So the institutions bring stability almost?
In a way, yes. They often have longer investment horizons. Their participation brings legitimization. It acts as a crucial counterbalance to maybe shorter-term profit-taking from individuals.
Which brings us to the core questions, I think, the ones everyone listening is probably thinking about. Our sources kind of pose this dilemma. Is this whale awakening a sign of profit-taking? I mean, 14,000x return, who wouldn't take profit? That seems pretty logical.
Very plausible, yeah. Hard to argue against cashing out some of that.
Does the fact that someone held for a decade, through everything, does that actually reinforce ETH's credibility as a long-term hold? Even if it was maybe accidental holding?
You know, what's interesting is it could kind of be both.
Right.
From the individual's perspective, yeah, it's almost certainly profit-taking. Who wouldn't secure at least some of that life-changing money? The psychological pull must be immense.
For sure.
But stepping back, the fact that this asset could deliver that kind of return over a decade, and that someone had the foresight or maybe the lucky forgetfulness plus the discipline not to sell earlier, that does inherently boost its long-term credibility. It's like an extreme proof point.
Yeah.
Foundational digital assets can deliver incredible value over time, despite the volatility.
Okay, so it's a bit of both. And what about the market impact? If this is just one whale, could we see more dormant wallets wake up? Could that lead to increased supply pressure, a trickle of early investors finally cashing out?
That's a natural concern if suddenly lots of these decade-old wallets started selling.
Yeah, that could push the price down, right?
Potentially. It depends on the volume and the timing.
Yeah.
But this is where that market maturity and the ETF demand come back in.
The counterforce.
Exactly. The market today is just much more resilient than it was. Increased liquidity, higher trading volumes. Multi-million-dollar sales can often be absorbed without huge price swings now.
So the ETF demand could just soak it up.
It acts as a very powerful counterforce. It's this dynamic interplay, right? Supply from early holders finally taking profits versus demand from new institutional capital coming in. If a huge number of these wallets moved all at once, yeah, you'd likely see some price impact. But the current institutional demand suggests there's a strong floor, a strong absorption capacity. It makes a massive crash triggered just by these individual moves seem much less likely than it used to be.
The market can tell the difference between one person selling and everyone heading for the exits.
Pretty much. It's learned to differentiate between isolated profit-taking and systemic selling pressure.
Okay, so we talked about that Satoshi-era Bitcoin whale, the $9 billion move. Let's just revisit that quickly. What's the absolute key lesson from that, especially comparing it to this ETH whale? What should we watch for with future sleeping giant events?
Yeah, that comparison is really crucial for thinking critically here. The number one takeaway from the Bitcoin event. Despite the absolutely monumental scale, $9 billion, dormant for 14 years, prices stayed stable.
No panic, no crash.
Right. That provides a really powerful parallel. It's a case study showing the market's newfound depth and resilience. It suggests that even massive profit-taking events by single individuals, they don't automatically trigger market-wide panic anymore, not like they might have years ago.
So the market just has more buyers now, more infrastructure.
More buyers, much more liquidity, more robust infrastructure, yeah. It can handle these sales without completely losing its cool. It tells us the market is becoming less sensitive to the actions of any single big holder, no matter how old their coins are.
So what does this mean for Bitcoin versus Ethereum? Are their market reactions pretty similar now when these things happen? Are they both just too big to be easily swayed by one whale anymore?
They're definitely becoming more similar in their macro market behavior, especially regarding liquidity, institutional interest, market depth. They're both seen as the blue chips of crypto now.
Right.
They have deep spot markets, tons of derivatives, growing ETF adoption. Now, obviously, their tech and use cases are different. Bitcoin is digital gold, ETH as this programmable blockchain.
Sure, different fundamentals.
But in terms of market maturity, how they absorb large sales, they're behaving more alike. The calm reaction to both the $9 billion Bitcoin move and this multi-million ETH move suggests that strong demand and better infrastructure can handle these supply shocks for both. It's a sign they're maturing as asset classes.
And these stories, this ETH whale, the Bitcoin one, They really feed into that narrative of blue chip long-term holds paying off, don't they? Like those stories of people buying Bitcoin for under $100 and just holding, it's the dream.
It really is. These stories hammer home those themes of patience and foresight. They show that with certain foundational assets, if you get in early and have conviction, the returns can be astronomical, far beyond traditional markets.
But it also highlights how rare it is, right? To actually hold uninterrupted for that
Well,
long.
extremely rare, especially with such volatile assets. It suggests either incredible discipline, maybe careful planning to ignore all the noise, or, yeah, maybe just lost keys that got found later.
So what can today's investors learn besides get lucky?
Well, maybe the power of identifying potentially disruptive tech early, investing an amount you can afford to lose, and then if you have strong conviction, having the fortitude to hold through the craziness. Focus on the long term, not the daily charts. But, and this is crucial, past performance doesn't guarantee future results. Not every early bet pays off like this. Far from it.
Good disclaimer. And just circling back one more time to those institutional ETH ETFs, BlackRock, the billions flowing in, it really cements ETH's position, doesn't it? Not just in tech, but in the eyes of traditional finance.
Absolutely. It's about more than just the money flowing in. It's legitimization. It's deep integration into traditional finance. These institutions, they bring huge capital, yes, but also rigorous due diligence, professional investor confidence.
So they provide that steady demand side.
Exactly. A crucial sustained demand side that's vital for absorbing selling pressure, whether it is from awakened whales or anyone else. It signals that ETH is maturing, viewed less as just a speculative crypto and more as a foundational tech asset, a legitimate part of diversified portfolios. That institutional embrace helps stabilize things, makes it more accessible.
Okay, let's try to unpack this a bit more, maybe thinking visually like some of the sources suggest, like that return multiplier. Visualizing 104 callers turning into $1.5 million. That 14,269x return. Beyond the money, what does that growth really signify for how we view new asset classes?
Yeah, that slash chart visual we talked about, tiny bar, giant bar, it hits hard. Beyond the money, it signifies the sheer power of belief in a disruptive technology. The immense value creation possible when an ecosystem goes from just an idea to a global force.
It's foresight paying off massively.
Monumentally. It demonstrates that kind of exponential growth potential that you just don't typically see in mature markets. It highlights the stark difference in potential returns and, we have to keep saying, potential risks between traditional investments and frontier tech.
Right. So thinking about the trend of these dormant wallets waking up, we've seen it across different cryptos. Is this signaling something about the market cycle? Like, are we near a top and early folks are cashing out? Or is it just random, people finding old passwords, hitting personal goals?
That's a great question. If we track these movements over time, and on-chain data lets us do that, see wallets inactive for years suddenly move, what does the pattern tell us?
So what does it tell us right now?
Well, right now, the evidence seems to lean more towards individual events rather than a coordinated exit wave signaling a market top. People hitting personal targets, finding lost keys, maybe errors accessing digital estates. The market seems able to absorb these moves.
So not necessarily a sell signal for the whole market.
Not necessarily, no. If it were a market-wide signal, you'd expect to see a much broader, maybe more synchronized surge in old wallets activating, likely having a much bigger impact on supply and price than we're seeing with these isolated events.
Got it. And then the counterforce again, those institutional ETF inflows, layering that data, like you suggested, ETH price plus ETF flows. Can that demand really keep absorbing potential selling from whales? Is it enough?
That visualization helps illustrate the dynamic, right? It shows the market's potential shock absorption capacity. You've got this supply side early investors realizing incredible gains, and this demand side, new institutional money wanting exposure.
That tug of war.
A constant interplay. And the scale of institutional interest now suggests the demand side is much stronger, much more consistent than in past cycles. It acts as a significant buffer. This new liquidity provides a cushion against big supply shocks, making the market more robust, less swayed by single large sellers. It helps keep volatility in check, relatively speaking.
Okay, last comparison point. This ETH move versus that huge Bitcoin one, the $9 billion wallet. Any subtle differences in how the market's reacted, or is the lesson basically the same for both?
It's really key to compare them. We look at the size of the move, then watch the immediate price reaction, volatility, volume changes.
Yeah.
The big takeaway, the $9 billion Bitcoin move didn't cause chaos. That's a powerful parallel for ETH.
So increased market depth helps both.
Exactly. Higher trading volumes, strong institutional participation. It seems to be making these massive individual moves less impactful than they used to be for both BTC and ETH.
Even though Bitcoin might still have deeper overall liquidity.
Bitcoin generally does, yes. But Ethereum's ecosystem is huge, DeFi activity is massive, and now it has significant ETF demand too. It's catching up fast in terms of its ability to absorb large sales. It's really a sign of maturity for both of them. These flagship cryptos are just becoming less vulnerable to the actions of one single whale, even one holding a decade-old fortune.
Wow. Okay, so this deep dive has really covered a lot. We've seen the incredible return, obviously, but also the careful moves of this early investor.
Mm-hmm. The test transaction, the fresh wallet.
Yeah. And the bigger trend of dormant wallets waking up, plus the absolutely crucial role of institutional demand now with the ETFs.
It shows how patience, even accidental patience, can pay off spectacularly in this space, and how the market itself is maturing, learning to handle these big moments.
This single event really feels like a snapshot of the whole evolving crypto landscape, doesn't it?
It really does. It's a testament to that potential of patient investing in disruptive tech, but also a clear sign of market maturity, that interplay between individual actions and these big institutional forces. It's fascinating. Crypto is growing up, adapting, getting woven into the wider financial world.
And these events, maybe counterintuitively, might actually underline the resilience these assets now have, rather than being seen as purely destabilizing.
Exactly. The lack of panic can build confidence.
Yeah. And hey, speaking of supporting this evolution, if you listening found this deep dive valuable and you want to keep getting these kinds of insights into crypto, please do consider subscribing to the channel. Hit that like button, maybe turn on notifications.
It genuinely helps us out.
It really does. Your engagement supports the channel, helps us show up in the algorithm, and basically lets us keep making more content like this for you. We appreciate it.
And we definitely do.
So to wrap this all up, we want to leave you with a few things to chew on. Considering everything we've talked about, those massive returns, the careful whale moves, the huge institutional inflows, what do you think it signals for Ethereum if more of these decade-old bags start to move?
Yeah. What happens if this becomes more common?
And maybe the more personal question, if it were you sitting on a 14,000x return after 10 years, would you cash out? Would you HODL for another decade? What would you do? Something to think about.